to be educated, but I'm so frustrated. Hello to my loneliness. I guess that ignorance is bliss. Take me back to before I knew. Rewind, take it out of cue. Innocence can be a young man's game. Signed up for the hall of shame. I wish I knew how much I miss.
Welcome to Money Mindset and Psychology program. This evening, I have a gentleman who is well versed in finance. He's a researcher as well as academics and then financial analytics. So today we are going to talk about investment. He will take us through the importance of investment and how to do investment. Welcome, Mr. Abu, to today's program.
Oh, welcome and greetings to all your viewers and your subscribers.
Thank you. Thank you.
Yeah, getting started. We all appreciate the importance of having a buffer in terms of finances. So I think the last time I spoke with you, we had a very good chat about savings. And but in the face of a world of interest where people have a lot of financial materials going on, and the time value of money is very essential, we need to also talk about investment too.
Yeah.
So when you talk about the importance of investment, investment creates funds, capital funds to start businesses. Investments are for emergencies.
Okay.
Investments are for retirements. Investments are for periods of incapacitation.
All right.
Well, definitely there will be a period where we will not be as versatile and as vibrant as we are now.
Okay.
So that's where we fall on what we have invested over the years.
All right.
So in general terms, yes, there's financial investments. There's social investments, capital investments, and all that. But clearly, we are talking about finances. So talk about
financial investments.
So we are basically coming to talk about financial investment. So what do people do? Let's even stick with retirement. Let's say people are investing towards retirement, towards their old age, towards maybe after their 60s, where they will not be as vibrant, as strong as they are. They can fall on some funds.
Okay.
For some time. It means that after now, which we are, some people, let's say my age mates who are in like the bracket, we are in the 30 decade up to the 40 decade, right?
Yeah.
Early 40s, late 30s, mid 30s, early 30s. So at that time, we are expected to be getting to the peak of our working life. Maybe most people started working in especially from our part of the world, people go to the corporate world, working and earning income in their late 20s. Okay, so in their late 20s, when people start earning income, then they start thinking about savings, how to save some of the income. Now, when you start saving some of the income, then you start looking at investment. What am I looking at? How should I invest? So a recent study by a colleague I saw in Ghana, we were trying to ask people, how are they planning their retirements? Okay, and the results were very interesting. People were is using their savings, some of their savings, to build a house and buy land.
Okay.
Because they know land don't depreciate in value. Whatever land is, it will most likely is in value. So in future, they can sell the land.
They can sell the land.
Some people are building houses so that they can sell the house or rent some of the apartments out when they are no more working.
Okay.
Some people are investing in their children's education to make sure that by the time they retire, their children will also be earning money so that their children will take care of them
at their old age. Okay.
Yes. And some people are also, their only hope is the statutory deduction, that is the SSNIT deductions they take from them, that in the end, when they are not earning any money again, SSNIT will send them some money.
Okay.
So this comes to the point where we need to start talking to people. So I used to work for a certain company, which you know.
Yeah.
It's a company later collapsed because of some government directives. We were into some of these investments, retirement, investment. People save a lot of their incomes in there, waiting to fall on it when retirement comes.
Yeah.
And all of a sudden, the another company too came. I don't want mentioning huge interest rates. And they said they are selling gold and they use your investment to invest in gold and whatever. Within some few years, people's money was gone.
Yeah.
So if you are saving in this kind of industry, you put all your money in this industry, that you are waiting to fall on it when you go on retirement. And in the end, this person is not paying you because government has they broke some of the laws. Some of the people ran away with their money, so it means that your retirement money is gone. At retirement, you are not getting anything. So that one becomes, it gives us, like, we need to start talking about educating people when it comes to investment.
Yeah.
Now, the first principle of investment you need to talk about first, that what do you want out of the investment?
Okay.
Are you investing to grow your money, in the sense that some people are investing to grow their money so that maybe they touch some level of amount. Maybe they're investing 10,000 cedis now and adding some maybe every month to make sure that by some number of years, they have a certain number of amount. It means that they have a target they want to look at. So people too just want to preserve value. You have 100,000 now. You don't want 100,000 to lose value. Okay. So you are putting it in an investment package so that whatever it is, even in 10, 20 years time, what 100,000 can do now, the amount in there can do same or even better.
Do this. Yeah.
That's some people's targets, right?
Yeah.
And just some people just want income after certain years. Now I'm earning so much in this industry. I want to be saving some so that maybe after 20 years, I can get some income from the investments when I'm no more working. Yeah. Those are the pension people and stuff. So, and all these kind of people comes with different kinds of risk tolerance. Okay. Some people can entertain risk averse. Yeah. Yeah. So I remember in trying to ascertain whether some people are risk lovers or risk averse,
Okay.
In some companies, when you are filling the form, they just ask you, if I give you, if I give you 100, do you want 100,000 now, or maybe 300,000 after 5 years?
After 5 years. Okay.
Right. So you
Okay.
just ask you to see whether you are ready to tolerate some risk, or you don't want to take risk. So the person don't want to take risk, so I'm taking it now.
Taking 100,000 now.
So people will say, oh, maybe 300,000 after 5 years, maybe around 1 million after 5 years, maybe it will be good.
Yeah.
I want that one. You are ready to wait till that time, take that money.
Okay.
It means those people are able to tolerate some level of risk. Right. Now, the next question is, I've talked about what do you want.
Yeah.
2, I've talked about risk profile.
Mm-hmm.
The next question is, where are you investing your money? Where are you investing your money? Because if you know your level of risk, you know what you want, then you have to start talking about where you are putting your
Where
money.
you are investing your money.
Yes. 1, don't put your money in any industry you don't understand.
Okay.
Any investment instrument you don't understand. So let me tell you this. Some people came into Ghana, they said they invested in gold, okay?
Yeah.
An investment in gold, they were taking people's money and promising them 7% to 10% every month. It means that when I put my 10,000 in there, right?
Mm-hmm.
If I put 10,000 in there every month, this investment is giving me 1,000 cedis as interest.
Yeah.
In 10 months, my money has doubled.
Sure.
The 1,000 cedi interest, because some people were not taking it. They were reinvesting.
They will just,
it.
yeah.
Roll over. Right. So that also comes in. So if I, okay, let me talk about this before I go back to where I want to go. So this person, it means that if you are giving me 10% every month, it means that in a year, because you are taking my money to trade in gold, right?
Yeah.
You are giving me 10% every month. And the argument is Ghana have been mining gold since the beginning of the year,
centuries.
since the beginning of the century, and the Ghanaians have not benefited from it. So
Yeah.
this is the time Ghanaians should invest in gold and get something from it. Right. Now, 10% every month. It means that in a year is what, 120%, right?
120%, yeah.
You have more than doubled your money.
Exactly.
More than doubled your money. And my company where I used to work, they came to do a very good presentation, some presentation, and I was in charge of research, so I was tasked to do ground check on the investments. Because it looks good. Who doesn't want his money to double every month?
120% within a year.
Yeah, people were withdrawing from banks and putting it in there. Yeah, even the banks were putting their money in there.
Yeah.
Because there was money. All right. So I started doing something. They said they invest in gold. Their trade is gold, okay?
Yeah.
And in a year, they are able to produce a trade and give you whatever you give them times 2 and even more.
Yeah.
It means that I should look through and see the performance of the gold itself. Nobody is Father Christmas. If they are giving you 120%, it means they are getting about
More
200%.
than that.
Okay. So I went through and I realized that even within the past 15 years, as at that time, gold itself has lost value about 5%. Gold itself.
Yeah.
The gold they are trading to give you 120%. Even for the past 15 years, it has lost value. It has lost about value. It means that they must be doing something else.
Yes, to get the money.
To be able to pay you that. Long story short, after going through all this, we realized that it's just a big Ponzi scheme.
Okay.
It's a very big Ponzi scheme. We all know Ponzi schemes. Maybe some other time we'll talk about Ponzi schemes.
Yeah.
And the way they use it to the pyramid scheme, where they use the new members' money to pay the old ones, and the unsustainability of it. Because it's a pyramid and this using new people to pay old ones, the base is so large that in the end it will topple over.
Yeah.
It can't stand on its own. It's not sustainable. So we didn't even try to do business with them. So later when government, or later when the authorities came in to realize that these people, this is what they are doing, and what they are doing is even illegal and whatever, and people were crying that their monies were in there and stuff. Some of us saw it long ago. We didn't even step in there. Okay. So the first red flag is don't invest in what you don't understand.
Okay.
Or you find yourself in Germany now.
Yeah.
In Ghana, people bring a lot of automobiles, cars, and spare parts, right? From Germany. And those metals and what. Maybe you have some amount there, you want to try that business. But first, do your research before you step in there. Don't invest your money in an industry you don't understand. Make sure you understand what you are doing.
It's powerful. Don't invest your money in the industry we don't understand.
Where you have the slightest doubt, run away.
Okay.
Or you talk about money. And trust me, wherever you are losing money, someone is gaining money.
Yeah.
The moment you've lost money, realize that somebody is at the other end gaining money. That's how the game is. So you lose money, someone gains, you get, someone loses, you get.
Someone money is in someone's pocket.
Exactly. So in order not to be the victim, play safe. Don't put your money in industries you don't understand. If you have the slightest doubt, run away with your money. It's your money.
Yeah.
2, in investment, if it sounds too good, it's probably a lie.
Okay.
Let me repeat that one. In investment, if it sounds too good, it's probably a lie. Now this company comes and is promising to give you 10% every month. Every month or every 30 days, you are getting 10% with your principal still lying down.
Yeah.
It's too good. And yes, it's too good to be true. It's a lie. So if it sounds too good, it's a lie.
Okay.
If someone tells you there's a business that you invest in, and that business in the end of the year, or maybe by within a short time, your principal will triple, and It's a lie.
It's a lie. Okay.
Nobody is Father Christmas. Nobody is sitting there for you to come and take that money. So if it's too good, it's a lie.
All right. Yeah,
Right.
because what you are saying, I quite remember when I was teaching in Wenchi before I came to Accra.
Yeah.
Before we met at Ise, I was teaching
Yeah.
in Kama Senior High in Wenchi, and then
Oh.
there was the same scheme that was there, and then one man tried to convince me that I should invest because he has invested, and but then he bought Opel Astra. So I told you that as for me, I don't like. I always want to spend money that I work for because
Yeah.
I don't trust it because it's somehow too good. Like as you said, you put about 200 Ghana, and within a month you are getting 400 or something, double. So I don't know. This is too good to be true, and it also collapsed as those did. So what they're saying is true.
Yeah. Yeah, it's a Ponzi scheme. And they are using the new people to pay the old people.
Yeah.
And if you are not lucky, and because it's a Ponzi scheme, it's a triangle like this.
Okay.
The top is small, the base is large. So
okay.
Only few people are gaining at the top. Only few people at the top are gaining.
Okay.
The base very large. You see, the base is very large. It's a triangle. The base is very large, so a lot of people will be losing down there. And you think, hey, one friend has gone gain, maybe two of the very few people who have gained from it will be trumpeting it, making noise about it. No. Go away with your money. You work hard for your money. You don't put it in there. Now, let's see the various investment. Maybe we can do rare investment. We can do portfolio investment.
Okay.
Real investment is the one where maybe you start real work. Maybe you have a friend, you think that friend has some skill, you can invest in him, and maybe when the profit comes, you share. That one comes with high returns because you are taking risk directly.
Okay.
In investment, the higher the risk, the higher the returns.
Higher the returns, okay.
The higher the possible returns. Because I have a friend who is a barber.
Okay.
He doesn't have a shop or something. Maybe you have the money. So you get them a shop, right?
Yeah.
You buy a machine, you spec the shop, very good shop. And the person starts working. You have taken a direct risk. Direct risk in the sense that, one, the business might not even get customers. People might not have it.
Okay.
Maybe you project that a day, you can barber about maybe 10 people, 30 cedis each. A day you make 300 Ghana. Right? Maybe you save some. Maybe in the end, you get about, in the month of end of the month, you get about 9,000, you share. Maybe he takes 5,000, you take 4,000 to cut down your cost.
Yeah.
You do that. If you get a good person and you do that real investment, it might work for you.
Yeah.
Real investment is where maybe you are in Germany, you see that Ghanaians like the German cars. I don't want to mention any brand.
Yeah.
Ghanaians love the German machines. And maybe you see that there's a taste for it. You've done your small research. To Ghana, I buy this and I clear it at the port, can sell it this on the market and beat the price and get my profit quick and go.
Yeah.
very good real investment. You are taking a direct risk, because you can go get your things, clear the car, and nobody will not come in to buy it. You are taking risk. Maybe you expect that within a month or 2 months you have sold it, and maybe in 5 months nobody is coming to buy it. At some point, you even have to revise the price down.
Yeah. We are still discussing investment, and Mr. Abu said that in investment, if it sounds so good, it's probably a lie. And never invest in company that you know nothing about it. It's good to invest for your future. It's good to invest. Welcome back, Mr. Wu. So
yeah.
We were discussing investment. As we said, investment, if it sounds too good, then probably it may be a lie. Yeah.
So the next thing is real investment.
Okay.
So I've talked about the real investment where you take
real
direct
investment.
risk.
Okay.
You can step it in yourself. You can partner anyone, go into any industry you like, and get your money.
Okay.
That's real investment. Now, portfolio investment, which most of us think that's investment. I'm buying shares, I'm putting money somewhere, I'm treasury bill, whatever. You understand?
Okay.
Those are portfolio investment. Portfolio investment is that you are taking less risk. Okay, so there are people who cannot tolerate risk.
Yeah.
Like I first talked about. So you can use their money to go and do real investment. Because if you invest in the cocoa seller in your hood, and maybe one day she's going to work and the cocoa pours away, our investment is dead.
It's gone.
Gone. So what do? We go to the government securities.
Okay.
Treasury bill. The treasury bill is the government's investment package, which is a very few percentages above the inflation rate. It is meant to give you the lowest returns on the market.
Okay.
So it won't give you so much, but at least something small to keep the value of the money alive. So those who are saving for pension, you don't want your money to get lost. Treasury bill, government bonds, right? It is the lowest risk investment. Although recently there have been debt, domestic debt restructuring, whatever, which maybe can affect it, and maybe your money might delay. It is the lowest you can get. If you have a large sum of money, you put it in there, you enjoy the returns.
Okay, so but I think recently, I don't want to mention the bank's name. There's a bank in Ghana that a friend of mine bought a treasury bill there, and then I think she went for it, and then they said that she will get lower than what she was expected, and then even up to now she has not received the money.
Yes, that's what I'm saying. Recently, what happened is that when our government, local governments, the Ghana government went to join the IMF, they had to do domestic debt restructuring. So that affected most of the instruments down here. So for the next 1 to the next 5 years, I think they are going through that and it will fizzle away.
All right.
But if you are saving for the long term, you don't need to go for it.
All right.
Now, some people too can do portfolio investments, but they want to tolerate some risk. You can step into the stock market.
All right.
Want to buy shares of companies. But the shares, it means that when the company, and in years where the company incurs a loss, you lose some of your money.
Yeah.
If the company gains profit, you have a share in the profit. Am I making sense?
Yeah, sure.
Yeah. So those are the dynamics. Some people go into the exchange rate market, especially in down here. You spend euros.
Yeah.
And maybe some years back when you had euros, right? If you had euros, and now maybe the exchange rate has gone up, that when you convert the euros back to cedis, you have money.
Okay.
So I'm going to the commodity markets where you invest against the gold prices, the oil prices and stuff. So those are the complex parts.
Okay.
So, but the last thing I want to talk about is managing investments.
All right.
So, I first talk about what do you want to do? Do you want to grow your money? Do you want to ensure constant income?
Yeah.
You just want to have a target you want to hit or something. So some people just want to have constant income. So maybe they buy the share, they buy the treasury bill, and every 91 day, whatever profit comes on it, they take the profit and they leave the principal there to still be working for them.
Okay.
If you do that, it means that your money is not growing. You are just spending the interest and leaving the money there. So people want to grow their money. So whatever interest comes, they reinvest. They reinvest and even add more funds.
Okay.
Those are aggressive investors. Have you seen the difference?
Yeah.
Some people want to grow their money. So they put large there. You get it?
Yeah. It's very interesting topic that we are discussing.
Yeah.
And you have taken us through a lot of things that we need when it comes to investment. And
but the last thing,
okay,
the last but not the least, I want to talk about is about diversification.
Okay.
In order not to, it's a way of hedging against risk. When we are kids in Ghana, we said, in Chi, they said, don't put all your eggs in one basket, right?
Yeah.
So we use that as a way of managing risk in investments. You diversify. You make sure that you don't put all your investments in one industry, in one instrument, too. So if you have maybe 500,000 to invest, you can divide it into 500,000 into treasury bills, 100,000 into stocks, 100,000 here. So when, like your lady friend, you said, when the treasury bill starts misbehaving, you know that this place will be fine. This place starts misbehaving, you know this place will be fine. So when there's a loss here, there will be profit here to take advantage of it. I think that's the last thing I wanted to say. That's diversification.
All right. Thank you very much, Mr. Abu, for taking us through investment. It's a very interesting topic, and I hope we will continue with it, because now we have nowhere to invest. And then probably in our next discussion on investment, we'll go into deep to know how to start investment. If some people are looking for investors, they have an idea of opening a company, have an idea of establishment, how to start investment in those sites. So thank you once again, and then for passing through, for educating us on investment.
I like to be
All right,
educated,
welcome.
but I'm
All
so
right.
frustrated.
Thank you.
Hello
All right,
to
thank
my
you.
loneliness. I guess that ignorance is bliss.